Good morning, everyone. Welcome to the July 22nd meeting of the CalHFA Board of Directors. Today's meeting will be recorded for public viewing. The video recording and the meeting materials will be available on the CalHFA website at calhfa.ca.gov. Today's board package and public comment guide are posted in the handout section of the control panel. Also, there will be an opportunity for the public to comment by using the raised hand feature later during the meeting. More information will be provided at that time. Now I would like to introduce the CalHFA Board Chair, Michael Gunning.
Awesome, thank you, Courtney. Welcome, board members. Quite an exciting day. Courtney, let's do a roll call.
Okay, Ms. Avila Farias.
Here.
Ms. Gallagher.
Here.
Dr. Imbasiani.
Here.
Mr. Gunning.
Yeah.
Mr. Hunter? No, Mr. Hunter. Ms. Johnson Hall? Mr. Starr for Treasurer Ma?
Here.
Director Velasquez?
Here.
Secretary Castro Ramirez?
Here, good morning.
Mr. Prince? Absent. Mr. Russell? Mr. White?
Here.
Ms. Campbell for Mr. Gordon?
Here.
Ms. Calvert for Ms. Bosler?
Here.
And Mr. Kavir?
Here.
Chair Gunning, we have a quorum.
Awesome, thank you, Courtney. Has everyone had a chance to look at last month's minutes and go through them? Were there any changes, any edits? If not, let's deem them approved and move on to item number 3. I don't know about you guys, but I'm pretty excited. I think as a board, this is now the second time we've had one of our membership become an executive director, right? Tia first and now Tina. It's just exciting, right? How about congratulations to our new ED? Good stuff. I wish she was on the board, on the call. I guess she's still getting acclimated. I've had a couple conversations with her and she's in the process. I think Don has a sense of when she'll start, so we'll let Don say that. But Don, I do want to thank you on behalf of the board for your leadership during the interim. And of course, kudos to the entire staff. It's just, I love how the operation works. And I think it's because of you guys' hard work and diligence and frankly, love of the organization. So kudos to you, Don, appreciate it. And with that, the floor is yours, Vern. Yeah, thanks, Claire. Go ahead, Don.
No, thank you, Chair Gunning and members of the board. I really appreciate the comments, and I think we too here at CalHFA are really excited about Tina's appointment. I personally have a lot of confidence that she's going to make an excellent executive director. She brings such a wealth of experience to the position, as well as just a real passion for affordable housing. And so, frankly, if I'm being honest, I wish she'd start tomorrow, right? Because I'm sort of ready to have some help around here. So, so with that, I think I'll just jump into my comments. So, by way of comments today, I want to provide the board with a quick update on the mortgage relief program. At our last board meeting, almost exactly a month ago, we mentioned. Birds are singing as I speak. That's nice. Whose phone is that? Can you guys hear me? Yeah?
You're good, Don. Go ahead.
All right. I'm going to just plow through then. Okay. So about a month ago at our last meeting, we made you aware that the U.S. Treasury was expected to extend the June 30th deadline for states to submit their homeowner assistance fund plans under the ARPA funding that we received. And they were also to provide us some additional guidance and plan submission template. That deadline was indeed extended to July 31st, and to date, they still haven't provided us with additional guidance, a plan template, or even opened up a portal for us to submit. The way it's going, there could very well likely be another extension, but our team here intends to be ready to submit our plan by the current July 31st deadline. And as long as Treasury provides us a means to deliver that plan, we will do that. My understanding with our stakeholder groups at NCSHA is that a couple of HFAs have submitted their plan just via email to Treasury, but the feedback they're getting from Treasury staff is that those HFAs are going to have to resubmit their plans in using the non-existent template at this point when they actually release it. So candidly, the process has been a bit frustrating for the team here, but we're doing everything in our power to be ready to go when we get a green light to do so. We also mentioned at the last meeting that CalHFA was able to apply for and did receive the initial allocation of 10% of the homeowner assistance fund allocation, which is roughly $100 million. And the team is considering a pilot phase of the program using some or all of that initial 10% in the coming months here, sometime probably in late August or early September. The targeted pilot that we intend to do would allow us to do some end-to-end testing on our processes and the system to identify any potential issues prior to opening a portal up on a more broad-based initiative. I would also like to give, it'll also give us a chance to onboard a lot of the servicers that we really need to be a part of the program, but also help facilitate some initial data exchange between the two, because that's vital for the program to be successful. We have to be able to send information from our portal and our application process to the servicers and then have data exchange back to us. And a lot of times that takes some work to sort of get them up to speed, signed onto the program. And we've been signing people up as we go, but this will give us some time to sort of work out the kinks. Next, I'd just like to give a couple quick updates on the governor's budget as it relates to CalHFA. We updated the board previously on two items the governor proposed in his budget that interact with our agency. One was $100 million in homebuyer assistance and $81 million toward accessory dwelling unit programs. And that we have that program, the ADU program, set to launch sometime in September. The update today is the state budget has been indeed signed, and those items are now official. Our ADU program term sheet is about to be finalized, and we expect to send it out before the end of this month and to start onboarding our lending partners for the ADU program. Sort of in conclusion, we had already intended to go out with an ADU program prior to the budget negotiations, but this is taking what was a $19 million program funded from AB 101 funds and is now adding another $81 million to it for a total program statewide of $100 million. So we're excited about the prospects of what that'll do in the ADU space across California. For the $100 million in homebuyer assistance that we received through the budget, we will be using that to expand our down payment and closing cost assistance with a focus on qualifying households at lower AMI levels. So we're always going to be focused on, a sustainable mortgage scenario for our clients, but we're going to try to use this money to create more space at the lower AMI levels in sort of the groups that we serve. So with that, that concludes my remarks. So I'll turn it back over to you, Chair Kenny.
Thank you, Don. Before we ask for any questions, would you circulate that ADU term sheet to the board? I know I'm getting requests for it, and folks, I have a high interest. And I know Frances is off this week, but are you able to share the interaction with that Ting Bill 561? Will we still be, aren't we advising Ting, or isn't the treasurer on that program?
I think it's the treasurer is on that program, and I think there is a little bit of a brief on it in the back of your board packages that Frances provided in the ledge updates. But yeah, we will be working with the Treasurer's Office, I believe, a consultative role on what they're doing with ADUs there.
Awesome. Thanks, Don. Any questions from board members? Good. I'm glad to see we'll meet that July 31st deadline. I think you're right. They will extend that, but it's good to get it in and make sure we at least.
Yeah, we'll be ready. We'll be ready to go on our end. We're working feverishly. It's been doing great work to get this done.
Awesome. Good. Thanks, Don. All right, we have a series of resolutions to go through, folks. So let's start off with resolution number 2112, the discussion, recommendation, and possible action regarding the agency's updated investment policy. Mr. Sue, you're up, buddy.
Hi, good morning. Good morning, Chairperson, and also members of the board. Mark, can you queue up Baby Shark for me, please? I think it's more interesting than Peer Gynt, but anyway.
I don't have that due to the rights.
We have a couple of resolutions that we'd like to update. These are policies that the board has adopted in the past, and as time progresses, things have changed or we need to update them because we're smarter than we were before. And the first one is our investment policy. Next page, please, Mark. So resolution 2112, this rescinds our resolution from 2012. It rescinds resolution 2012-05 and adopts a new updated investment policy. Here, I'm just highlighting some of the key changes that we're making. We updated the scope of the bond indentures that are included in the investment policy. So since 2012, we have redeemed out quite a few bond indentures, and then they're no longer around. So we eliminate them from the scope of the bond indentures covered. We have also added the Director of Enterprise Risk Management as an authorized person. So now this policy is under the purview of the Director of Financing and also the Director of Enterprise Risk Management. And we've also added the state of California approved depository bank accounts as permanent investments. This is the fact that this is an oversight that this wasn't included in the past. This is prescribed in our statute, and it's something that we've been doing basically since the beginning of time. Adding in here is just sort of codifying something that we've been doing. Again, this is prescribed in our statute. And the last thing we added is an item that's catching up to the financing resolutions that the board authorizes every year. In our multifamily non-bond financing resolutions, the board has been authorizing the use of non-bond funds to fund multifamily loans. This is simply catching up to that sort of recent authorization from the board to allow staff to do that with our non-bond funds. So this adds for multifamily projects in which the agency has regulated units. CalHFA is able to use our non-bond funds to invest in those multifamily projects or loans. So those are the highlights. I'm happy to take other questions about the policy if needed.
Any questions from board members? Tim, I just had one. I know, what is it, GAAP or accounting policies change. Is there anything in updated policies that we need to do to be reflected in our investment policy?
No.
I didn't think so. I'm curious.
Yeah, no. The short answer is no.
Mr. Chairman?
Yes, go for
it. Yes, I have a quick question. Just a question with regard to the non-bond funds. If you can just maybe share with us how investing these in multifamily projects and those projects regulated by HFA, CalHFA, how will this contribute to the overall housing production goals?
That's a good question. So how we come about having non-bond funds oftentimes is from the the full redemption of bond indentures. So when we fully redeem out the bond indentures, whatever is left in the bond indentures gets transferred to the agency. So then what we've been doing with some of those funds is to, for example, recently, for example, we have had a couple of transactions in which they were refinancing, but they're not using tax credit because, as you know, the current environment it favors very much new construction, and refis, or let's say recapitalization, are having a harder time to find financing. So we do use some of our capital for those kind of examples, and we're helping to preserve housing stock in those cases, not necessarily in this sort of pro new construction environment, not necessarily adding environment, but as you know, preserving affordable housing stock is just as important in a slightly different light as adding new units, because there are some affordable units in this environment that are getting jeopardized to become market units, and keeping the affordable stock intact is also a priority for us.
Thank you.
Any other questions from board members? Is there a motion to adopt 2112?
I move that we approve
adoption.
resolution. Oh,
I think that was.
I yield. I'll take a second.
all right. I move that we approve resolution 2112.
And adopted by
Stephen
Mr. Russell? Okay,
Stephen
gotcha.
Russell seconded, yes. Thank you.
Great, there's a motion and second.
Before we begin, I'd like to acknowledge that Mr. Hunter, Ms. Sotelo, and Mr. Russell have all joined the meeting. Now we'll do roll call. Ms. Avila Farias,
Yes.
Ms. Gallagher,
Yes.
Dr. Imbasiani,
Yes.
Mr. Gunning,
Yes.
Mr. Hunter,
Yes.
Mr. Starr for Treasurer Ma,
Yes.
Director Velasquez,
Yes.
Secretary Castro Ramirez,
Yes.
Mr. Russell,
Aye.
Ms. Sotelo,
Yes.
and Mr. White.
Yes.
Chair Gunning, Resolution 21-12 is approved.
Awesome, thank you, Courtney.
And Courtney, I have Tina Johnson Hall. She's on the attendee side, and her microphone is also live.
Okay. Thank you.
Thank you. I've joined the call.
Thank you, you missed your welcoming. So we're not doing it again either.
That's okay.
Hey, Tina, I think I speak for the whole board. We're just so glad, so tickled, and so happy. Just great, great, great news, and congratulations.
Thank you, Michael. And just to the board real quick, I am so delighted that you have confidence in me to serve in this very prestigious position. I am just happy to have the opportunity to what I hope will be involved with making an even bigger impact at this very important moment in the state's history. I'm delighted to be a part of the California Housing Finance Agency team now, very talented folks. I do want to take a moment to thank Don, who has just done an incredible job. He was one of the first persons to actually reach out to me after the announcement was made, along with Secretary Castro. And so I feel like I'm coming into a very warm place right from the beginning. And that's going to set the stage for us to do some very exciting things going forward. So thanks again to the board. And I can't miss Michael Gunning, who also reached out to me and is also helping me with find a place to live. I don't know much about Sacramento. So Michael, my husband and I are reading your emails very, very closely and critically. And we hope to find a place real soon so that I can start to get to work. Thank you, everyone.
Thanks, Tina. And I think I speak for the whole board. Everyone here wants to lend a helping hand. So all of us in Sacramento, if you got any places to stay, let her know, because she and her husband are looking. Good stuff. All right, let's get back to the agenda and resolution number 2113. Tim, I think you're still on.
I am. And Tina, you kind of missed it, so someone may have to explain this to you later. The first important decision you have to make is to choose your intro music. So the next resolution is an update of our master hedge policy. Again, this is a policy that we last updated in 2014. This resolution 2113 rescinds resolution 2014-07 and adopts a new updated master hedge policy. As a reminder for the board that this policy covers hedging activities related to lending or our outstanding loan commitments. And at this time, this is really only with respect to multifamily lending. The single family lending is being done in the TBA space by an outside vendor that we talked about before, Lakeview, and who's also serving as our servicer. This policy does not speak to the hedging of variable rate bonds. That was a decision that we made when we created this policy back then. But as the board knows that our hedge position on variable rate bonds have been declining over time. And just a real quick sort of update on that, we currently have about $478 million of fixed pair swaps. They remain on the portfolio and they're sort of declining in balance and amortizing over time. And those fixed pair swaps act as a balance sheet hedge for our lending activities for multifamily as well. And we're monitoring them to make sure that they perform, and we use them again to hedge our lending activity on the multifamily side. And just as an aside, as the board might know, the current year of MIP lending has created what I call a bumper crop of permanent loan lending. And it's quite possible that our balance sheet hedges from these orphan swaps would not be adequate to hedge those lending activities, and we would have to use this policy to enter into new hedges to hedge, again, these multifamily loan commitments that we have. Again, not bonds, but loan commitments. So some of the key updates for this policy: establishing a new internal committee and an annual review requirement for this policy, and also eliminating, as I mentioned, hedging for single family lending. We're currently are not hedging for single family TBA lending, and outside vendors doing that, and removing exposure limitation for qualified multifamily hedges. The hedges are meant to hedge an actual underlying loan. So we felt that if we have an exposure limit, it might actually make the hedge less effective. In other words, if the hedges are losing value, the loan should actually be increasing in value. They should offset each other. There's some basis risk involved, yes, but they should offset each other. If in the middle of the hedge, we get rid of the hedge because we reach some exposure limit, that means that we're unhedged for the remainder of the period. And also extending the term of these qualified multifamily hedges out to 42 months. As we're doing more new construction lending under the MIP program, many of the construction loans are out 36 months, and then it's very customary in the lending space to have a 6-month extension on top of the original period. So it would take us out to 42 months. So extending the term of the hedge out to 42 months is also another thing that we updated. Those are my general highlights of the big things that we updated, and I'm happy to take questions.
Any questions from board members?
Yeah, I have 2 questions. This is Eileen Gallagher.
Go ahead.
One question, so the single family hedging, I understand we're not doing it internally any longer. Is it that we are doing it and paying someone to do it for us, or that they're taking the risk and therefore hedging that under the TBA program?
The latter.
Okay. Okay.
Yeah. So then if we have let's say a broker dealer who's hedging on our behalf, and the hedges that are still on let's say on our credit, we would definitely put it here. But they're hedging, we're paying them to hedge, and all the risk and credit risk and counterparty risks on them, not on us.
Okay. And then for the swaps that are still outstanding, I mean, how do you think of that? I mean, I know that you've been trying to unwind the unhedged swaps, and that's kind of a hedge without a corollary debt instrument. This doesn't affect that at all, does it?
This policy, so since you asked, for the entire period in which we did enter into swaps for variable rate bond, we didn't actually officially have a policy. What the leadership did at the time was they reported to the board when they entered into hedges. But we didn't really have an overall policy. We created this policy at the time because we felt that, well, there needed to be a sort of separation between the old era in which we're doing hedges for bonds, and because also around probably a little bit prior to that era, the board took action to basically say that we cannot do hedges on variable bonds anymore. There's a history of those financing resolutions that excluded hedges for the sake of variable rate bonds. And then we, as you know, we haven't issued variable rate bonds for probably 15 years now. And we have recently, I think I told the board last time, eliminated all the variable rate bonds. But then we realized that there was a need, since we're in the lending business, to hedge when we have outstanding loan commitments. So we created this policy so that we can enter into hedges for these outstanding loan commitments. And as I mentioned, for multifamily, these commitments could be out quite long, could be out 36 months, 42 months if there's an extension. So I'm sorry about the history. So then the hedges that we have left, once upon a time, hedge variable rate bonds, but then we allow sort of this divorce, if you will, of the variable rate bonds and the hedges, because we were really, really concerned about all the risks related to variable rate bonds, and we took them down at a faster clip than we took down the orphan swaps. So now the orphan swaps are part of sort of how we manage our interest rate risk on our balance sheet. This is a little bit inside baseball for you. So what we do is that we track sort of the dollar value of 1 basis point of change on those orphan swaps, and we use that as sort of a hedge on our lending activities, and we track the dollar value of 1 basis point change on our loan commitments, and we look at them to see if they're generally sort of like on par before we decide whether or not we need to do more hedges. And as I mentioned earlier, generally speaking, up until this point, those balance sheet hedges, these orphan hedges, which are acting as a balance sheet hedge, have done an adequate job of hedging all our loan commitments as we originate and as we commit. But this recent activity that's coming up in 2021 for MIB lending is probably going to break sort of our amount of hedge on the balance sheet from these orphan swaps, and we may have to enter into new hedges in the next 6 to 9 months.
Thank you.
Thanks, Eileen. Good questions. Dr. Ambassiani?
Yeah, a question with respect to the update that says eliminating hedging for single family lending. I'm just curious if this is a policy change that is divorced from the reality of the single family housing world out there, or whether you are reading tea leaves in the sense of expecting a major downturn in that single family market and are protecting ourselves on CalHFA. I speak as, you know, CalVet, my agency, is very involved in the single family market, and we're concerned, especially with low income veterans of whom there are 1.6 million in the state, when the caps on evictions, both among renters and the mortgage foreclosures forbearances, when they expire, I see major conflict here. Are you trying to get out from that possible tsunami ahead of it?
No. Well, first of all, as a director of financing, I try not to read tea leaves because I don't think we're smarter than the market. Meaning that, just like generally speaking, like everyone thinks that rates are going to go up. Well, if rates are going to go up, then how come rates are not at 10%? So, the market consensus is really, really important to understand what it means. And I generally don't think we're smarter than the market, and we're not trying to take some sort of a view that's, different from what the marketplace is saying. Some sort of so but anyway, having said that, what this is doing is this is in the context of our hedging policy. You might recall that from the business plan that the board approves in May, we're targeting to do starting on July 1st of a couple of weeks ago to June 30th of next year, we're targeting to do $3 billion of single family lending. This is not at all to say that we're walking away from that business, far from it. What this is saying is that as we make loan commitments to the borrowers, there is a need to hedge that loan commitment, but we're not hedging that loan commitment ourselves. We have asked our servicer to, as we work with our servicer to make those loans, we have asked our servicer to also hedge that interest rate risk over time. And this policy here permits staff to do these hedging activities internally. Since we're not doing that hedging activity internally now, we made a decision to remove this provision for now. And should we want to do this internally in the future, we'll come back to the board.
Good question. Thank you, Doctor. Any other board questions from the board?
Yeah, Mr. Chair, this is Delilah.
Hi, Delilah. Go ahead.
Hi. So, Tim, that's a good segue to just understanding a little bit about the Oversight Committee. It's an internal committee. Is the plan to report back to the board, or maybe to, maybe we can engage at the audit committee level, just to find out how things are going and what decisions have or haven't been made relative to the hedging policy. How do you plan to kind of report back to the board?
So one of the ways, that's a good question, and it's a very contemporary question in the financing division. One of the ways that there is a very, it's a great report since I helped to create it. It's a great report we send to the board all the time that used to be called variable rate bonds and hedges. And as I mentioned just now, and also reported to the board last time, that we no longer have any variable rate bonds. So we're in the middle of transforming that report. So we focus on just hedging activities as described in this policy, rather than trying to sort of bridge all the stuff that's happening on the variable rate bonds, all the stuff that's happening on the legacy swaps, and then this new stuff. And what we are talking about is also sort of the cycle of those reports. And as I mentioned, that the old cycle used to be on February 1st and on August 1st, because that's when bonds get redeemed and that's when the swap amortize. But we're thinking about the new cycle will probably coincide more with the SITLAC approvals, because now the hedges are in large part tied to loan commitments. So then, for example, like this, ordinarily we would take the report, after the August board meeting, after August 1st to the next board meeting. That cycle may or may not be the same. This year, as you know, the next SITLAC approval meeting is in August. So then we're likely to take it to the after that. So we can show you that, okay, this is how much loan commitments that we came out of the August SITLAC board meeting, and this is what it does to our hedge position, and so on and so forth. So the long, that's the only long answer. The short answer is that we're likely to take a report like that to the board probably twice a year, because that seems to be sort of the larger approval cycles out of the SITLAC committee meetings.
Okay, that makes sense, and it helps us project the check-in and report back. So I appreciate that. Thank you.
So just to clarify, Tim, no need for the audit committee to have a role. You'll do that internally?
That is entirely up to the audit committee, but I don't think so unless you guys want it. What we're going to do is that we're going to, like I said, make this into a report to the board about twice a year.
Okay.
Yeah, that makes
I
sense.
think that's discretion of the chair of the audit committee. All right, any other questions on resolution 2113? If not, is there a motion to approve?
I move.
There's been a motion, is there a second?
I'll second approval.
Motion and second, thank you. Courtney, roll call, please.
Ms. Avila Farias,
Yes.
Ms. Gallagher,
Yes.
Dr. Imbasiani,
I vote yes.
Mr. Gunning,
Yes.
Mr. Hunter,
Yes.
Ms. Johnson Hall,
Yes.
Mr. Starr for Treasurer Ma,
Yes.
Director Velasquez,
Yes.
Secretary Castro Ramirez,
Yes.
Mr. Russell,
Aye.
Ms. Sotelo,
Yes. Yes.
and Mr. White.
Yes.
All right. Resolution 21-13 is approved.
Awesome, thank you, Courtney. All right, moving on to item number 6, the National Mortgage Settlement Funds. You're still on the stage, Tim.
Yes, since I'm 2 for 2, they have asked me to present this item as well. So as you know, the key people who are running this program are Claire and Kathy. And all the kudos on this program goes to them. I'm just on a streak here, so I'm presenting this item. And also that Don has in the past reported to the board on how we're doing in this program. So I just want to use that as a preface to, this is really their good work and really not mine. So this resolution 2114 adopts additional allocation of the remaining national mortgage settlement funds. So we last came to the board for approval in last August when we first created the statewide counseling program, when the board authorized $50 million out of the original $300 million to be allocated to create a statewide counseling program. And that's a program that's keeping, Claire and Kathy quite busy. So first, a little bit of counting of how much is left. So as I mentioned, we got $300 million out of the governor's 2021 budget. The board has already authorized $50 million out of the $300 million to create a statewide counseling program, which is up and running and active. CalHFA is permitted to take a 5% administration fee out of the $300 million. So that leaves us with $235 million. Again, 300 minus 50 minus 15 gives us a remainder of $235 million. So this resolution is requesting the board to authorize that of the $235 million remaining, that no more than 10% be allocated to strengthen the existing statewide counseling program, and the remainder to be used to create a mortgage assistance program. As the board knows, more than 100% of our energy, perhaps, is dedicated to creating the mortgage assistance program out of ARPA. We haven't spent a lot of time thinking about this program at this time, but we do know a couple of things about this program, and we think of it, they could be a way to complement the existing ARPA program that we're thinking about, that we're creating. The one thing is that, for example, these dollars are less prescriptive than the ARPA dollars. And two is that in the legislation that created these dollars funding to CalHFA, it does specifically call out the 2 to 4 units. And at this time, our design for the ARPA dollars is only for 1 unit owner occupied. So again, these dollars are less prescriptive than the ARPA dollars, and we can think of in the future of coming up ways to complement the existing ARPA program as we sort of stand up the ARPA program. We'll spend more time to think about how these dollars can complement the ARPA dollars. Those are my comments, and I'm happy to take questions.
I guess, Tim, if Claire or Kathy want to say anything, but don't feel pressure to, just as if you want to add any context to that. Great. Any questions? Go ahead.
I was just going to say thank you for the opportunity, but Tim did a great job. I have nothing to add, Chair Gunning.
All right. Thanks, Claire. Any comments from board members?
Mr. Chair, on this item, I'm kind of two minds about it, because I think that one of the super strengths that Ms. Tina Johnson Hall has is her experience with, single family and mortgage programs. And, the resolution is broad enough to allow for that discretion to exist in the new executive director and the decisions around the programs. But I think it's also important to just, hear directly from Ms. Johnson Hall when she gets, up and running and looks at this more closely, and then can come back to the board, with her thoughts or her programmatic initiatives, so that, it's a little bit more, I guess, focused or concentrated and not as broad. I think that there's a strong correlation between, the work that we do programmatically and, what we're about to face, which is, some imminent foreclosures and, some problems having to do with the forbearance due to the pandemic. So I just really, I don't know, I'm of two minds. One is I want to have it be open and available for the staff's discretion about the programs, but I also want to hear about programmatically what they're going to be doing and how they're going to be doing, and maybe do a little bit more focused and determined resolution.
Yeah. That's a good point, Delilah. And I think underneath point 2, it authorizes the executive director to take any actions necessary on the program. But I agree. I think once Tina's in the seat, a report back at the next meeting would be helpful for all.
Yeah, and just to see how it correlates with the governor's, budget and the vision there, and, maybe with the VA and some of the programs with the VA. So just really seeing how that ties up together.
We know it's coming, right? We just want to be flexible enough to have programs ready to deal with it.
Mr. Chairman, if I may just add, thank you so much, Delilah, for the point that you have just made. First, of course, want to acknowledge the governor and the 2020-2021 budget. As Tim mentioned, allocated $300 million to help stabilize California homeowners that were, essentially impacted by COVID-19 in this pandemic. To Claire and Kathy and Don and Tim and the entire team, thank you for the work that you're doing in terms of implementing this level of assistance. Of course, this level of assistance goes really hand in hand with the rent relief program that the state is administering. So focus on, keeping renters and landlords stable, keeping renters housed, and helping landlords, pay accumulated debt, right, that has been caused by the COVID-19 pandemic. But, to the point, that Delilah just mentioned, with the additional dollars that will be coming in through the mortgage assistance program, I think being able to just, continue to have a greater understanding of how all these pieces come together, and to the extent that we can target and ensure, of course, that these dollars are reaching those homeowners that are, hardest hit, and those homeowners that often, times get left behind. So just, providing Chairman and colleagues, just some additional context and agreement that this is a very important investment from the state, but it goes hand in hand and it complements the additional efforts that are underway to keep Californians housed, given both the public health crisis that we've been through and also the economic, challenges, right, that many families have faced.
Awesome. Thank you, Secretary Castro Ramirez. Is there a motion to adopt 2114?
I'll move for adoption.
I'm sorry, I heard two motions.
I'll second it, Director Russell.
Okay. And was the motion by you, Anna Maria?
Yes.
No, it wasn't by me.
Who made the motion?
Lourdes.
Thank you, Secretary. All right. Motion and a second. Courtney?
Okay. Ms. Avila Farias?
Yes.
Ms. Gallagher? Ms. Gallagher, I think her screen might be frozen. We'll come back. Dr. Imbasciani?
I vote yes.
Mr. Gunning?
Yes.
Mr. Hunter?
Yes.
Ms. Johnson Hall?
Yes.
Mr. Starr for Treasurer Ma?
Yes.
Director Velasquez?
Yes.
Secretary Castro Ramirez?
Yes.
Mr. Russell?
Aye.
Ms. Sotelo? And Mr. White?
Yes.
And Ms. Gallagher, are you back?
I'm back. Sorry, my connectivity's been iffy, but my vote is yes.
Okay, excellent. Okay, resolution 21-14 is approved.
Awesome. Thank you. I think that's it for us, Don. Anything for you? Anything from you or any additional comments from board members?
Yeah, nothing further from me, just that item 7 is the informational reports that we typically provide you. So if you have any questions or you need something to help you sleep at night, you can go through those.
Just to worry more, right? Dr. Imbasciani, did you have a comment?
I have a point of personal privilege, if I may.
Please, please.
I'd like to invite the board members to a birthday party. The California Department of Veterans Affairs is celebrating 100 years of its California Veterans Farm and Home Loan Mortgage Program. I don't think there are any other programs in the state that reach 100 years. So 27 times in the last 100 years, California voters have overwhelmingly supported a bond initiative that has given me the means to give direct mortgages to 425,000 California veterans. So it's an astounding number. You know that, and we do this with one of the lowest foreclosure and delinquency rates in the nation. I think our secret sauce, Teresa Gunn can give you more information if you're curious, is that we give a contract of sale and not a deed of trust, which enables us, should a veteran, for whatever reason related to COVID or any mental health issues or drug and rehabilitation or PTSD or whatever, we have a legal ability to freeze that mortgage. And of course, being Veterans Affairs, we supply the necessary wraparound and supportive services, whether that's rehabilitation or financial literacy or job training. I think it's a model program for the nation. I wish I could advertise it more loudly. Anyway, August 11th, we're going to have a reception and a birthday cake with a lot of candles, if the fire marshal will allow us to light candles. And you're all invited, and maybe I can ask Courtney to supply my contact information to anyone. It'll be in Sacramento. Happy birthday.
Oh, that's awesome. Maybe if you have Courtney, send the info to Courtney, she can distribute it to the board.
Absolutely.
Thank you.
Awesome. Thank you, Doctor. That's great news. Congrats. Any other comments from board members?
Chairman?
Yes, speak, please.
So just a quick update. Gustavo Velasquez here. I just wanted to echo what the Secretary mentioned earlier about the historic budget under the California Compact Plan, $100 billion, of which $12 billion historic single one investment to address homelessness in the state, and an additional $10 billion to address other pressing affordable housing issues. We're lucky to be the recipient of some of those funds. To just highlight two quick programs. One, our very successful Home Key program that we executed last year to create interim and permanent housing for homeless individuals and people at risk of homelessness, creation of more than 6,000 permanent units. This program will now almost triple in size thanks to the governor's investments and the approval by the legislature. And it will be not just hotels and motels, but it will be, a number of other facilities that will be able to convert to create, thousands of additional units in the next couple of years. And then another important highlight is close to $2 billion that will help invest in a lot of multifamily projects that have been waiting for many years, waiting for bonds and tax credits, and we'll be able to, as you know, the demand for bonds is, over, $6-7 billion, of which $3.5 billion are HCD awarded projects. So we'll be able to go back and fund so many of those projects so that it relieves that pipeline for bonds and tax credits. And so, and obviously it creates, focused on shovel-ready projects, it creates thousands of additional units. So combine this level of funding plus Home Key, I think we can be proud to say the state will accelerating our efforts to produce additional affordable housing. So I just wanted to highlight that because just wanted people to have some context of the level of investment in homelessness and affordable housing this time. Thank you.
Yes, Director Velasquez, thank you. The governor's budget, clearly a focus on housing, and I think all of us as board members here, I just believe the next 18 months is going to be critical for all the work we do here. Because there's going to be some fallout from this, and it certainly looks like the state is prepared, and I hope everyone else is ready. So are there any members of the public that wish to comment?
Chair Gunning, we have no public comments at this time.
Awesome. Thank you, Courtney. Well, with that, I'll entertain a motion to adjourn.
So move.
There's a motion. Second?
Second. Anna Marie.
Thanks all. We stand adjourned.
Thank you, everyone.
Bye, everybody.
Bye.